Welcome back to the Awesome Agents podcast. Today we are talking about a number so big it almost does not feel real. OpenAI is closing a $100 billion funding round.
Yeah, 100 billion with a B, and the valuation is now north of 850 billion. To put that in perspective, they were at 157 billion in October 2024. So they have more than quintupled in about a year and a half.
Okay, so walk me through who is actually writing these checks, because the investor list here is wild.
Yeah. So the biggest chunk is Amazon, reportedly up to 50 billion, then SoftBank at 30 billion, structured as three 10 billion installments, and Nvidia is in for up to 30 billion. Microsoft is also participating but at a much smaller scale, low single digit billions.
Wait, Nvidia is investing 30 billion into OpenAI? Is that not a little circular?
It is extremely circular, and honestly, that is the most interesting part of this whole deal. A huge portion of that money is going to flow right back to NVIDIA to buy GPUs. Jensen Huang basically said as much. He called OpenAI one of the most consequential companies of our time.
So Nvidia invests in OpenAI. OpenAI spends that money buying Nvidia chips. That is not really an investment. That is a customer prepayment with extra steps.
Right, the article called it demand generation with extra steps, which I think is exactly right. But from NVIDIA's perspective, it is brilliant. You get equity upside plus guaranteed hardware revenue.
Okay, so what is Amazon getting out of their 50 billion? Because they already have their own AI platform with Bedrock.
Distribution. As part of this deal, OpenAI is expected to expand onto AWS and use Amazon's custom chips. Amazon watched Microsoft get the early cloud AI advantage through their OpenAI partnership, and this is them clawing back ground.
So Amazon is basically paying 50 billion to make sure OpenAI workloads also run on their cloud. That is expensive customer acquisition.
At this scale, everything is expensive customer acquisition, but the enterprise contracts that come with it could be worth multiples of that over a decade.
Now, here is what I keep coming back to. OpenAI is projecting 14 billion in losses just this year, and cumulative negative cash flow of 143 billion through 2029.
Yeah, the Deutsche Bank estimates are pretty sobering. They do not expect to turn a profit until 2030. Revenue was 13 billion in 2025 and growing fast, but the infrastructure spending is growing faster.
So they are burning cash at an unprecedented rate. Their valuation keeps climbing, and investors keep lining up. How does that math work?
The bet is that whoever controls the most compute wins. OpenAI is projecting Nvidia-like revenue of 100 billion annually by 2029. If they hit that, the current valuation looks reasonable. If they do not, fair re.
That is a very expensive if. And here is what makes it even more interesting. The article mentions that OpenAI's technical lead is actually narrower than ever.
That is the real story underneath all the funding headlines. Chatbot Arena rankings show GPT models facing serious competition from Gemini, Claude, and open source alternatives. One internal assessment apparently placed ChatGPT 5.1 at 11th in current rankings.
11th. So why are investors still pouring in record amounts?
Because OpenAI's strategy has shifted. It is not about having the best model every quarter anymore. It is about infrastructure dominance. The most compute, the widest distribution, the deepest enterprise integration.
That sounds like the Cloud Wars playbook from the 2010s.
It is exactly that playbook. And honestly, it worked for AWS, it worked for Azure. The question is whether AI infrastructure follows the same winner-take-most dynamics.
There is also the IPO angle. They are reportedly talking to Wall Street banks about going public in Q4 of this year.
And they are apparently worried about Anthropic listing first. Anthropic just closed a 30 billion round at 380 billion. If Anthropic IPOs first and sets the narrative, it could dampen demand for OpenAI shares.
So it is a race to the public markets too. This is not just about building AI, it is about building a financial fortress.
Right. The preferred shares in this round convert to common stock at IPO. Every investor in this deal is essentially making an IPO bet with downside protection.
Maya, big picture. Is this sustainable? Can you just keep raising hundreds of billions and burning through it?
Honestly, I think we are in uncharted territory. No private company has ever operated at this scale of capital consumption. But the counter argument is that no technology has ever had this kind of potential market size either. The answer depends entirely on whether AI becomes as fundamental as cloud computing or whether it hits a ceiling.
I guess we will find out by 2030. That is what OpenAI is betting on, and now their investors are betting on it too. Thanks for breaking that down, Maya. And thanks to all of you for listening. We will see you next time.
See you next time.